Hi, my name is Peter. I'm here to introduce you to EQT Nexus, which is EQT's semi-liquid private equity fund, which we have launched in Australia. So what is EQT? EQT is a private markets firm that is global, but rooted in the Nordics. So we almost have 30 years of experience by now. We were founded in 1994. So really deep rooted, a long time ago in the Nordics, and started by a family called the Wallenberg family, which really dates back to 150 years ago during the Industrial Revolution. And why is that important? It's important to the EQT culture for two reasons. One, it's a Nordic culture, which is a bit more, I would say, rooted in values that are more soft than maybe what you normally would have from private equity firms or private market firms. But also, and more importantly actually, that the Wallenberg family is an industrialist family, which basically means that they've owned companies since the industrialization in the 1850s and all the way up till now, companies like ABB, Ericsson, Electrolux and so forth. And that basically gives a heritage on a industrial way of looking at private equity as opposed to a financial way of looking at private equity. Today, EQT is a global firm, as mentioned, around 1,800 employees, 20 countries, 57 nationalities, and basically a very, very diverse global platform across private equity, real estate, and infrastructure. What I'll show you here is basically the growth of EQT. As you can see, and as I already mentioned, it started in 1994. We were very small. Started out of Stockholm, grew across the Nordics, and really you can see that real growth has only come within the last 5-7 years. Also after the acquisition of Barings Private Equity, BPEA, which is a leading private equity house out of Hong Kong, and also with the acquisition of Exeter, which is a leading real estate firm based out of Philadelphia. But basically the reason why we mention this is you can see that the evolution from being Nordic private equity to being Northern European focused to now actually being a full house, full service private markets firm, as I mentioned, across private equity, real estate and infrastructure. So why should you as an investor consider private markets? There's a few reasons. We'll build on them. One is higher returns, lower correlation to other asset classes. What does that mean? Basically means that when one asset class goes up, it doesn't necessarily go down with other asset classes, so it stays maybe higher at one time when other asset classes go down. And there's a large investment universe that is attractive for private investors to invest in. So I'll basically say if you want to build a well-diversified portfolio, you should consider private markets. And here is one of the evidences. So if you look at here, there's a few gray bars here over 3, 5, and 10 years. What you'll see is on the light gray is if you've stayed in public markets, MSCI World Index, which basically is an index consisting of 1,600 stocks globally, performed well, good returns, but not as good as the gray bar, which is the private equity index. So that's one of the reasons why you should invest in private markets. The other reason is, as you can see on this chart, is that the number of, and in this instance is US companies that are listed, i.e. public, has gone down over the last 20 years or so. And the number of PE, private equity-backed companies, has only gone one way, which is up. So therefore, again, the investment universe, or in other words, the companies that are available to invest in, are much larger in the private market than in the listed market. So you might ask yourself the question, why is the allocation to private markets still very limited, especially for private individuals? As you can see, 2% allocation, roughly, for private individuals. Well, there's a number of reasons mentioned down below, 5 of them in total. Private markets have historically been difficult to access, right? So how do you find the managers is one question. The other question is investment minimums. In EQT funds, historically, you needed to invest a minimum of 5 million euros, which is a lot for just one fund. difficult to manage your cash. Why is that? Because on day one, when you make a commitment to a closed-ended fund that has a life of 10 to 12 years, you basically get capital calls over the first 3 to 5, 6 years. That is a difficult process for a private individual. And as mentioned, you're locked up. So when you sign the dotted line, the next 10 to 12 years, you're staying in the investment. There is no opportunity to get out. And then when the private market fund starts to send distributions back after roughly year 5, 6, then you need to find and go all over again and find the next fund, make a commitment and reinvest. So all of that work we have changed with Nexus. And how we've made that possible? Here it is. So basically, if you think about this slide, at the top level, EQT Nexus is the Australian unit trust you would invest in. You buy units in that unit trust, you have immediate exposure to the underlying funds, there is no J curves, i.e. there is no capital calls going in the next 3 to 5 years, and there's no distributions coming back. You basically just make one investment and you stay invested as long as you want to, and you can invest on a monthly basis and you can get out on a quarterly basis. So what is the investment? What are you actually investing in? As seen on this slide, you're basically investing in a number of EQT funds down below, so a diversified portfolio. Nexus would also hold a bit of liquidity, that's on the left-hand side, the liquid assets, and it will also make some direct investments in companies to get direct exposure, not just via the funds themselves. So how did this work? So think about an institutional portfolio. How does your large pension funds allocate to private equity? It basically looks a bit like this on this slide, and this is the EQT platform. Early stage investing, or venture investing as it's also called, is a little bit of EQT's overall investments, 10 billion. Mature buyout funds globally, Europe, North America and Asia, is the lion's share of EQT's investment platform. And then on the right-hand side, infrastructure, which is also a very growing asset class. And that's again, stable investments in mature companies. So this platform that is roughly 226 billion euros in total basically has allowed us to create Nexus. And if you're interested in ESG, Nexus will be what is called an Article 8 fund, because all of the underlying funds that we invest in Nexus are either Article 8 or 9. So here is basically what's under the hood. Busy slide, but stay with me. Top left-hand corner. We have made these 7 funds that you see, Future, EQT 9, Bearings 8, so forth, down to Ventures 3, we have warehoused them on the balance sheet of EQT to basically make sure that when you invest, you immediately get the expected returns, which on an annual basis, as shown here on the right-hand side, will be 12 to 15% net. So the target portfolio going forward, clearly because these funds that we are invested in from the outset will mature, they'll start to distribute capital back, and therefore the fund manager will need to make new commitments. All of that, shall we call it hassle, that we've taken out of the investing that you normally would have to do if you invest in the individual funds. So we've taken that off, and over time, what you should expect to see in the fund is roughly a 60% allocation to EQT funds, as bottom right-hand corner, 25% or up to 25% of the fund in co-investments, direct investments into companies, and to manage all of the cash flows, both capital calls, distributions back, about 15% in liquidity. What I really want to leave you with here at the end is, what are you getting? So you're getting access to the EQT broad platform across private equity and infrastructure through one single investment in one unit, really to make it easy for you as an end investor. And what we also have done is to target a portfolio allocation or construction, just like you would see at the large pension funds. So therefore, really bringing that rigorous allocation that we have provided to pension funds for the last almost 30 years to you as an individual investor. And of course, very, very important, maybe most important, is that we bring exactly the same funds in exactly the same way to create performance, which in this instance will be 12 to 15% per annum, to you as an individual investor. So that's really in a nutshell what EQT Nexus is all about. So if you want something that is simple to allocate to, that has liquidity if you need it, although I would recommend that you look at this from a 3 to 5 year horizon, and annual returns between 12 and 15% net, i.e. after fees, then Nexus would be the right place to look. Thank you very much.